Hi everybody, this is George Castellon with Compass and welcome to my September 2020 market update for San Diego, coronavirus edition. And what I will be explaining in this video is how coronavirus has actually caused prices to go up in San Diego, and also I'll explain why, in my opinion, this has happened. So let's get right into it. It's been really counterintuitive what's happened in San Diego around March or so and April. I really thought, and a lot of agents, a lot of experts thought that this pandemic would make prices go down. But actually, homeownership has become more desirable and the opposite has happened in most areas. Basically all of San Diego, except for downtown, which has been pretty flat and pretty consistent. We're having, situations where there's 25 showings in one day, 13 offers on a home, 16 offers on a home, and this is even including homes around and above $1 million. So the market is super, super hot, and let's get right into it and take a look at the numbers. And then after I look at the numbers, I'll explain to you why I think this is happening. So first of all, let's look at this little table that I made for you. We can look at the year-over-year numbers from August of 2019 to August of 2020. The median home price in San Diego, excluding mobile homes, went from $590,000 to $660,000. That's basically a 12% increase in price, which is twice as much as what we've been seeing in recent years. From 2011 or so to 2019, we had been seeing about 6% appreciation annually. In August of 2020, the number of home sales was right around 2,900, and in August of 2019, it was right around 3,200. So the number of sales actually went down by 9%. And if we look here at the active listings, that's the reason. The reason is that we only had about 3,900 homes on the market in August as opposed to 7,200 in August of 2019. So the inventory has gone down by 46% year over year. And that's why there's not as many homes selling, but that's also what's driving the prices up. You can see here that the pending home sales right now in August is about 3,600. And since we only have around 3,900 homes on the market, we are running at about 1 month's worth of inventory, which is making this a super seller's market in San Diego. The next thing I want to do is compare 2020 during the coronavirus period, which is basically March through August of 2020, to the same period, March through August of 2019, so that we can really see what coronavirus has done to the market in San Diego. So let's start with March of 2020, where the median sales price, as you can see, was $600,000. That was a 6% or so increase from March of 2019, where the median sales price was $565,000. In April, prices were still creeping up to $610,000. We hadn't really had the effect of the coronavirus on the market yet. But in May of 2020, we actually saw a price decrease, which is very rare to see during the spring and summer months in San Diego. And the reason for that was that, you had some cancellations of escrows during that time period because buyers were, didn't know what was going to happen in the market. So some buyers backed out. You also had price reductions in escrow where a buyer might be in escrow, there's a pandemic going on, and they were able to negotiate a lower price on their contract. So that affected the prices, and prices actually went down. But since May, we have had a steady and substantial increase in the median price in San Diego. As you know, the interest rates were being dropped at that time, and at first, early on in the coronavirus, the banks didn't actually drop the interest rates right when the feds dropped their interest rates. It took a couple months for that to take effect. And in June, we started to see that interest rate drop make the prices go up. And also, people were kind of getting used to coronavirus, understanding it a little bit more and feeling more comfortable about buying. And I think that, people that were maybe in apartments or that were renting or didn't have enough space, they started getting a little bit stir crazy and wanted to buy their own place. And, getting more space for their family and for work from home and all that stuff. So the demand went way up and prices increased accordingly. 610,000 in June, 641,000 median sales price in July. That was a huge jump. And then 660,000 in August. So we've had huge price gains during the last 4 months here in 2020. So the reason why this is happening is pretty simple. It's economics 101, supply and demand. Demand is high and supply is low. But what I've been trying to figure out is why sellers are not putting their home on the market. Because you would think that with prices so high that sellers would be putting their homes on the market and selling their homes for top dollar. But I think a couple of things happened. Initially, when sellers were thinking about selling in March and April, a lot of them did not put their homes on the market. And at the same time, interest rates were going down. So you had a whole bunch of buyers coming in to those sellers that did put their home on the market and offering multiple offers and increasing prices and going above ask. In some cases, buyers right now are waiving appraisal because prices are going up so fast that the appraisals aren't coming in. So in order to get that property in a multiple offer situation, you might have to waive the appraisal to get the seller to accept your offer. All this is happening, and meanwhile, those sellers that were thinking about selling and then upgrading to a new home, or maybe retired folks who are wanting to downsize, they have to sell their home to buy. And now that the market is so hot, they're looking at what the prices are to acquire a home, and they're saying, I don't want to pay that much for a home, and I don't want to be in a multiple offer situation. And the other difficult thing about it is that if you have to sell your home to buy a home, you have to send a contingent offer. And if you're competing against, 10, 12, 15 offers, you're not going to be able to compete if you have to tell that seller, hey, wait for me to sell my home first, because there's going to be other buyers who don't have to sell their home first. So now those sellers are kind of stuck, and some of them have opted to refinance into super low rates of 2 3/4 for a 30-year fixed. And they might be using that extra savings to customize their home to be work from home ready, and also to facilitate the online learning that their children are now doing. And also you might be seeing them making their home, kind of like a staycation home. All those things that you wanted to do to your home that maybe you didn't have the time to do before. Now those projects are starting to happen. Home Depot is super busy. There's all kinds of home improvement projects that are happening. A lot of people just decided to do that. Another group of people that were thinking about selling probably went with the forbearance option. The government and the banks have offered, 3 months, 6 months, in some cases even 12 months without payments. About 8.4% of homeowners have taken the forbearance option. And that definitely is affecting inventory to a certain extent, because those people are just staying put in their home and not making any payments and saving that money. Some of those people might have lost their jobs, and maybe, you can't go and buy another home if you don't have a job. So you're not putting the home on the market for that reason as well. There's other people who are just concerned about the economy as a whole. They don't want to, sell their home, buy another one, and then have the market, correct on them right after they buy a home. So they're just kind of waiting to see what happens. I think also the elections are affecting a lot of sellers. A lot of people don't like to sell right during an election because you don't know what might happen, and you might want to wait until next year after things settle down and put your home on the market then. So all of these things are affecting the amount of new listings coming to the market. So that's why I think that the supply side and the people who are putting their home on the market has not yet caught up to the demand side. However, I do think that the demand might start to slow down a little bit, because prices have gone up so much that it's taken a lot of the juice out of the super low interest rate. So I want to show you here on a quick Google mortgage calculator what the lowering of the rates has done to the market. So last year about this time, in August of 2019, the average sales price was $590,000, and the average interest rate was 3.75 for a 30-year fixed. So that would give you a payment of $2,732 on your mortgage for principal and interest. Now, let me change this to $660,000, which is the current median sales price in San Diego, and then drop the rate to roughly around 2.875, which is kind of where they are right now. And you see that the payment is $2,738. So basically, the payment at $660,000 with the current rates is the same as the payment was last year at those rates at $590,000. So we'll see what happens. At some point, prices increasing are going to have to tamper down the demand. So what does all of this mean to those of you who are looking to buy or sell in the market today? Well, first of all, let's do the easy one. If you have an investment property and you've had thoughts about selling and cashing out, go ahead and put it on the market and just wait to get multiple offers on it. If you are a move-up buyer or somebody who is downsizing because you need more space or you have too much space or you're relocating or something like that, just know that you're going to be selling high, but you also are going to be buying pretty high. You've had a lot of appreciation over the recent years, and if you need to make a move, it's time to take all of that equity and put it into your new home. I also will say to please take a look at the Compass bridge loan option that we offer. Please reach out to me because I really like that option for my clients who need the equity from their current residence to buy another one. The bridge loan will let you buy before selling, and it also avoids you having to do contingent offers, which is really tough to do in this market. If you're currently renting and you're thinking about buying, I want you to look at this as a lifestyle change. If you're looking for homes, make sure that that home is going to suit your lifestyle for a little bit longer period of time, maybe 5 to 7 years or even 10 years, as opposed to 2 or 3 years. I wouldn't want you to go buy a home and think that you're going to be able to sell it with some equity in a couple years. I want you to buy a home that suits your needs and the needs of your family, that you're going to be able to reside in for quite some time. Your home is an investment, but it's also a place that you need to live in. So that's the approach that you want to take right now. Now, you're going to be in multiple offer situations, so don't get over emotional because you might have to send, offers on 5 or 6 homes before you get one. So you just need to be mentally prepared for that before you go into the market right now if you're thinking about buying. Also, when you're making your decision, keep in mind that rents go up. So if you're going to be a perpetual renter for years to come, rents are going up about 5% a year in San Diego, and buying could be a hedge against that, basically hedging against inflation, because when you buy and you lock in a very low rate, you are now in the driver's seat and you can keep that home as long as you want, stay there as long as you want with the same payment without having to, keep getting your rent bumped up by your landlord. So that's it for my 2020 market update. Thank you for watching. Please subscribe to my channel for more market updates and videos on San Diego lifestyle. And I'll talk to you guys next month.